right. Hey there. What's going on, everybody? Chris Franks with Texas West Capital. Oh, coming at you live here Friday, February 13th. February the 13th, guys. Friday the 13th. That's what it is. That's what I'm trying to say. I don't know if y'all kind of deal with that, but I don't. I don't believe there's anything necessarily bad about Friday the 13th, y'all. And so far, it's turned out to be pretty good, right? So we're going to talk today about the CPI and how that came in, jobs number earlier this week, how we're looking forward here a little bit. Before I get going here, let me do this. In case y'all haven't heard, I'm going to put that right up there. I've got that QR code up there. That's for the book that I just put out not too long ago called Before You Blow Up. And it's to help you understand what you're probably doing wrong and how to fix it and how what you're doing compares to what professionals do as traders. And you're going to find a lot of great information in there that's going to, if you pay attention and really kind of read it with an open mind, is going to open up a lot of understanding for you in how you're sabotaging yourself when you're trying to trade. So be sure and check that out, guys. When you get it, you're going to get access to any updates that I do going forward as information, updates and whatnot with that. But anyway, yeah, so it's a really great resource to have. Think of it like a reset manual. Sometimes people think that they have to just get on to new strategies and new, this and that. And really new indicators, and really all they need to do is understand what's going on, so that they can change the few things that they're screwing up themselves. And it puts them just freaking, so much further ahead of where they were. So, yeah. Anyway, check it out, guys. I think you'll get a lot from it. Again, I just try and help you guys understand the things that you're doing as retail traders that's really screwing yourself up, from this future that you want to have as far as trading goes. Because if you don't get those things figured out, you'll never get to where you want to get, period. End of sentence. It's all there is to it. So anyway, yeah. So how are y'all doing? Y'all doing okay today? We've had a really interesting day in terms of what's gone on, but nothing to be unexpected. So we had jobs report on Wednesday, which was kind of two ways on that, right? The first part of it was, hey, we were expecting 60,000. And everybody's like, oh, no, we're not even going to get that. We're going to miss that. And yet we came in at 130,000 jobs, which was great. The other side of that was that the revisions for 2005, the annual revision, brought the numbers down for 2005, down to 800 and somewhat thousand jobs. But the people kind of expect that to come. So we had the good for the month over the month. We had the bad for the overall. And so that kind of set us into this, let's wait and see what happens Friday. CPI kind of tells us what's going to happen. CPI came out today. Oh, excuse me, I got the hiccup. Sorry about that. And what we got was headline CPI year over year was 2.7% previously. It was expected to come down to 2.5%, but it actually came in at 2.4%. Okay. So we did even better. They were already expecting headline CPI to come down, but it came down even better. Core CPI was 2.6 previously. It was expected to come down 2.5% this time, but you had a lot of FUD out there. A lot of people saying, oh no, it's going to be higher. It actually came in as expected. So CPI came in good. Okay. CPI came in good. And so what I posted yesterday, if y'all follow me on Twitter, on X, I said basically we were going to wait to, the market was kind of waiting to see what happens today. And if we got cooler than expected CPI, we'd expect probably a good day of trading, prices go up. If we got, CPI that came in under, well, we'd probably get the opposite. So what happened? So it came in good. And we got initial pop and a short pullback, and then it's continued up through here. Those who were in the liquidity cartography group, They know last night it pulled back exactly where I said it was going to pull back. I mean, within a few dollars, basically. And then took off this morning, and it's already hit the initial target this morning. So that's been great. We've had this set up. If you're, in the liquidity cartography group with us at TWC, obviously you've had a good day. You had a run there from about right around 66,000 up to 69,500 so far. So $3,500, 5% price appreciation. Our initial target was 68,762. And so, we came out a little bit above that. But anyway, yeah, so doing real good. We'll look at that chart here in just a moment. Other alts are also coming up. Last night in the market breakdown that I do every weekday evening for our group, where I look at what happened kind of with the market and then what's coming up, and I bring out charts with stocks and crypto. I only had 2 cryptos last night, and one of them was BCH. As much as I don't care for the person involved in whatever, I was like, here's the chart. And so we got a great little pop this morning, doing well, right? And so, again, just kind of making money as we should be. Now, does that mean every time is right? No, of course not. And if you're new to trading and you think that every time you should be correct, or you think that in order to be good, you have to get it right all the time and you have to be perfect, those kind of thoughts are going to just completely screw you up. Okay. They are going to absolutely do all the bad work on you that you don't want done. Because it's that misnomer, right? Because in life, I don't know about you, but I know in life, I, was kind of trained by my father to be perfect, to at least strive for perfection, right? To do all this you be able to do. But thinking that way in the markets is going to lose you money left and right constantly. All you have to do in the markets, I tell you guys this all the time, I'll say it again right now. It's 2 things. One is you need to use proper risk management. Every time you trade, that's it. 2, you have to lock in profits consistently. That's all you have to do, guys. We tend to make it a lot more difficult than what it is. There's all these things we got to do. No, that's all you have to do. It's simple, right? Trading is simple, but it's not easy. And it's not easy precisely because of you, because of me, because of ourselves. We make it much more difficult than it has to be. We strive for perfection, right? We try to grab every little penny in the trade. We try to long the very lowest price. We try to short the very highest price. And doing all that is what actually makes you lose money. If you're here listening right now, I want you to do one thing for me. Think about how often you've had a target and price has gone up and you've been in good profit, but it didn't quite reach your target and then started pulling back and you waited. Instead of locking in your profit, you waited because you thought, man, I just got to get up to that target. It was just a little bit higher. And then what ends up happening is it comes back against you. And either you allow it to liquidate you or you allow it to hit your stop loss if you have one, okay? Or, you're losing money, right? Because it's going back below where you entered. How many times, be honest with yourself, how many times has it happened? I know for me, it happened a lot when I first started. It still happens sometimes. I try to make a habit of getting out of a trade prior to my target just in case it gets front run. But sometimes I still screw up. I'm only human. What I'm trying to get across to you is this thing we do to ourselves. Okay? It's not Wall Street. It's not crypto whales. It's none of that nonsense. You are your own worst enemy. You are the person that keeps you from being successful as a trader. Listen to what I just said. You are the one that keeps yourself from being successful. If all you have to do is use proper risk management, because in trading, you will lose money from time to time, no matter how long you've been doing this. I've been doing this 31 years now. Still going to lose money. I'm telling you right now, it doesn't matter how much you know about it, because you're still human. So, your emotional bias still comes in sometimes. Sometimes you'll try and get a read out of a chart that's too soon before there's had enough price action on it to really give you a solid read. Sometimes price, it could potentially be one thing, and then it just, kind of morphs into something else. This happens. So you're going to lose money as a trader, right? So the only guarantee in trading is that the newer you are, the more money you're going to lose and the more often you're going to lose it. That's the only guarantee. Okay. But you're going to have a lot of people online that are guaranteeing you price is going to do this and price is going to do that. And sometimes they get it right. Sometimes they get it wrong. But you need to be careful if somebody you're following is guaranteeing you something, even if it turns out to be correct. You have to understand that really they just got lucky. And we get lucky a lot as traders. We do, right? And so when you're going to trade, what do you need to do? Use proper risk management and just lock in profits. You don't have to get all the profits. You don't even have to get half the profits. You just have to consistently lock in profits. Because if you can do that, right? And you're going to get some losses. So the proper risk management keeps you from losing your butt when you get losses. But if you can do those two things, guess what happens? Time and compounding does the job you're trying to do in a single trade. Because what do we do as traders? We tend to look at that first trade or that trade we're in, and we're imagining what we're going to do with all the money we're going to make when it works out, right? But how often does the trades work out for you? For most people, very rarely, right? But yet in our mind, we think it's going to, and we're already spending all that money that we think we're going to make with that trade. If instead you focus on using proper risk management and locking in profits, guess what? It starts becoming a system. Now you're not focused on just that one trade, trying to make your life dream come true in one trade. It sounds silly when I say it, but realistically, that's what we tend to kind of revert to in the markets. And so if you can do those two things consistently, then time and compounding takes care of it. Time and compounding does that thing that you're trying to do on a single trade. You just got to be patient. I know it's awful, right? Because we come in here looking for dopamine hits. That's why y'all follow them stupid accounts where people are blowing tens of millions of dollars on a single trade. It's a dopamine hit for you. It's not trading. Most of that is nonsense. It's not trading. It's not even really gambling, right? Because real gambling is structured. It has rules. It has risk management. That's real gambling. So most of what people are doing, your large accounts on here, a lot of them, what you're probably doing a lot of times is not even gambling. It's not trading. You think it's trading because you're in a market and you're entering and exiting, right? But it's not. But what it is it's just YOLOing. It's just like a dollar scratch off. That's what you're doing. Let me know if I'm hurting your feelings. Good. They need to be hurt. Because hopefully what it does is it makes you stop, right? And it makes you think. You have to ask yourself, if you're in here listening to what I'm talking about, are you serious about becoming a better trader and understanding trading in markets and yourself? Or are you just interested in hearing what you want to hear? Because if it's that latter part, you're going to be sorely disappointed and none of this is going to make sense to you. But that's what I keep telling you. As a trader, you have to be honest with yourself, which as human beings, it's really difficult for us to do just in general, just in life. We tend to, things that we do that turn out well, we tend to give way too much credit to us. A lot of times it's a lot of timing and luck. But we tend to talk about just how, and in our heads especially, how great we are, right? When we do something not so well, I'll be nice about it there. We do something that sucks, right? We tend to not really take a whole lot of responsibility for it. It was somebody else's fault. It was something else's fault. We downplay it, right? This is human nature. But in trading, that's what gets you to continue losing money because you're not being honest with yourself about what's going on. I hope this is making sense. Okay. Oh, yeah. The nightly market break newsletter is incredible, by the way. Yeah, definitely, guys. Go to themarketbreakdown.com. Sign up. It's free. I do it Monday through Friday. Every Friday now, Fibbo is putting in, he's got a 16-part series called Threshold Lens, I believe is what it's called, where he's kind of explaining his thought process in markets and whatnot. and how he sees it and why he sees it the way he does. So if you want some more insight into that, we're about this might be the 7th installment of that, I believe, weekly installment. Every Friday, we add it there into it. So, but you can, get signed up there at the marketbreakdown.com. It's free, like I said. And then you can look back to the past Fridays and you can find all his installments up there. So you can check that out. Thank you for reminding me there. Yes, I know it's Crypto Chewy. I know it's you, buddy. Crypto Chewy's been with us for a while at TWC. So some of these guys have, like Sats has been with us for quite a while as well. Diego's been with us for years and years. And then we've got newer people like Florian and others that are here that are that you can see in there. So, but anyway, let me get through this. So let's go ahead, I guess, jump at the charts here. We did the usual kind of reminder of the important things about trading and things that you should be paying attention to and the things you should be focused on. Get the book. The QR code is up there in the corner. It's called, again, Before You Blow Up. And let me see here. Hey, there we go. Look at that. Looky. So, I mean, effectively here on the daily time frame, what we have is we have a descending channel. We had a sharp move down through it, and the next day immediately a sharp move back up. Now on the weekly, you'll see that that's just a wick, right? So if we jump to the weekly, that's a wick there. See that large wick? I mean, this is an absolutely amazing candle here. This is the stuff you like to see, right? You like to see a large lower wick, huge volume at the bottom of a drop, right into support. These are things you like to see. But what we have here, and by the way, resetting RSI into oversold, definitely a big thing there as well. Okay. So a lot of stuff going on here. Now, let me kind of put us back to the daily. All right. Now back to the descending channel. So this is what we call a throw under. Usually when you get a throw under, it marks like a reversal point, and you usually rally back up and break back out through the channel. Now that's a usually thing. That doesn't guarantee you. It's not an always thing, but it's a usually thing. So now we're trying to say, okay, what are we going to do? Now, the pretty cool thing here is we got to pull back into range support here, into this descending channel support. And as you can see, we're getting a bullish engulfing candle today. Okay. So like I said, we're up probably about 5% or so today, which is great. But we need follow through. Now, for those of you interested in moving averages, this is the 21 EMA up here. Here's the thing. Even if you expect price to go down lower, you should expect a bounce first, okay? If this is going to be a bounce, then this is an A, this is a B, we'll get a C. Most often, your C is going to be the 100 to the 123.6 extension. So that's about almost 77,000 to around 79,500. So again, even if I expect that price is going to go down lower, I'm expecting it to bounce first. Now, it doesn't have to get up there. Again, these are guidelines, not rules, but generally speaking, that's usually how it plays out. Now, here's the interesting thing. If this is the low, then 5 waves up to the 200% gets us up around 88.5. That gets us to the descending channel resistance. Usually what we look for, if it's going to be a reversal and we've got a descending channel or a descending wedge, breaking out through that wedge, right, is usually a third wave. So you get 5 waves up is wave 1. You get 3 waves back for wave 2. Wave 3 is the big breakout. That's your participation wave. That's where everybody goes, oh, crap, it's not just a dead cat bounce, right? Because you'll get this going up here, and everybody's being complaining, oh, it's a dead cat bounce, dead cat bounce, dead cat bounce, right? And then it comes back down. They're like, see, I told you for that wave 2, right? And then when you hit the wave 3, they go, oh, crud. It's not a dead cat bounce. And so then they get out of their short positions or were taken out of their short positions, and then they add in long positions. And that's why usually your third wave is the largest wave. It's usually larger than waves 1 and 5, in height, and it's usually much greater in terms of volume, usually. Okay? So right now, this is kind of where we're at. You can believe emotionally that we're going up. You can believe emotionally that we're going down. But in either case, logically, you should expect a 3-wave move here at the least. Get you a bounce. What I find interesting is 5 waves up carries us to the resistance. So if we get that, I'm really looking at, do we just get maybe 3 waves back toward about 76, 77 here? And then do we get a strong move back up and get that breakout? Because if we get that impulsive breakout and close on the daily above that descending channel resistance, that should have you significantly thinking the low is likely in here. Regardless of what you think needs to happen, 4-year cycles, all these things, right? So we don't want to get caught up in the narratives. Narratives happen after price. They usually go there to explain, right? So for instance, let's say we're not in the usual 4-year cycle. Let's say we're looking at this right here as what we would call a flat correction. So 3 waves down, 3 waves up, 1, 2, 3, 4, 5 waves down. In terms of Wyckoff, the Wyckoff method, this would be a terminal shakeout below this range support. Okay, so let's say that's what's happening. You don't have to believe it here. I'm just saying, if that's happening, this becomes the low, most likely, right? The problem is, well, not really a problem, but that would indicate that the 4-year cycle is no longer legit. And you go, but it has to be. It always has been. But here's the thing I've been trying to get across to traders here, especially more recently, is this realization, this acknowledgement that Bitcoin is no longer retail driven. Since January of 2024, it has moved itself into what we call that institutional volatility framework. Okay? That's why we get events like this. Now, people are blindly going, well, look, this here, this whole thing, that's what this looks like here, right? Oh man, that's what it looks like. What happened here? Do you guys remember or if you're newer, maybe you don't know, but do you know what happened in this area? This was Luna, Terra USDT depegging. This, coming down in here, was the effect that had on Three Arrows Capital, Celsius, whatnot. Okay? So this was a market structure event. Something literally broke here. That's why we continue down. Now, if you're looking at this, you go, oh yeah, look, it's the same thing. Looks like maybe it is, right? But something materially broke here. Nothing broke here. What we had over here is something called mechanical degrossing. And this is part of that institutional volatility framework. What happened here is everything went down. It wasn't just Bitcoin, if you remember. It was stocks, it was everything, right? Because what it was these institution types, right? Hedge fund, stuff like that, they have automatic rules, right? They're not retail. They're not emotionally driven. Their rules say, hey, listen, if where we're at in terms of price and what we're holding drops to a certain level in terms of risk exposure, we cut. That's all. It's called degrossing, and it's mechanical. It happens regardless of feelings, regardless of emotion. That's what we had here. So it may look the same here, but the events happening are absolutely different. Again, something in the market broke here. That was that Terra USDT depegging, which then caused, that was the catalyst. The break was what that caused to happen to Three Arrows Capital, Celsius, and the like, which led to the move down. Now, of course, this was the final nail in the coffin. This was FTX. But this was something that actually broke in the Bitcoin market or the crypto market. Excuse me. Sorry about that. Didn't have that here. But Chris, it looks the same. So what? Could it still go down? Sure, it could. But it's not going down just because it looked the same here. It was something different happened. The reason for this going down was what happened. It was what broke in the markets. What happened here? Nothing broke here. Again, mechanical degrossing across all markets, which basically is just risk reduction. Does that make sense? So again, nothing of that says it can't go down lower, but you have to pay attention because, again, the reason for being completely different there. Now, there are some other differences. You know, again, if you're going to say this is this right here, I mean, maybe, you know, maybe you can see that, though, you know, we actually found support here and bounced on and came down versus here where we've dropped down and we haven't followed through. Maybe something. But the other big difference is this base here. This base right here was from this point to this point. This was 236 days of sideways overlapping price action. We don't have that here. We don't have that here. So what does that mean? Well, big candles up mean easier big candles down. Here, big candles through the big candles into that support, okay? So all I'm trying to say is don't blindly think that the 4-year cycle has to prove through, because the 4-year cycle was based, a lot of it, on retail participation. That's why we were getting things like blow off tops, okay? Now here's another fun thing. Let me kind of zoom out to the weekly here and read it a little bit better. So those of you that have been around, maybe you know what the Pule multiple is and the pi cycle top indicator. Okay. They flash tops at the tops here. 2013, 2017. They said, hey, the top's in. The indicators at the time. They did not flash a top here. They did not flash a top here. Now, does that mean a top can't be in? No. But what if? What if this is still part of the same movement going up and these are just local tops along the way, not these definitive tops? Well, all of a sudden, this looks like this could potentially carry higher, right? The other thing I like to look at is when you're looking at advancements and retreats, you know, pullbacks along the way, generally with Elliott wave, what you're looking for, there's something called the theory of alternation. And basically what that suggests is if you have a sharp correction like this, right? Just ABC. Then the next correction is going to be more drawn out. Think triangle, flat correction, something like that. So usually, most of the time, these are going to be wave twos, and your more drawn out corrections are going to be wave fours. Why? Because your wave two, like I was mentioning earlier, is that whole thought of, oh, it's just a dead cat bounce. It's the whole thought of, oh, it was just a bounce. We're going to continue lower, right? And it usually happens sharp, which completely throws people off. There's a lot of liquidation stuff like that, right? But this is, when you look at this, this is more restructuring. This is more restructuring. Now, I've got ABC here. I think this is probably actually 1, 2, 3, 4, 5, and then WXY here. So again, another one of these quick ones, right? So what I'm looking at is, what if this is 1, 2, this is 3, 4, and then potentially getting a 5 here. And so what that means is you have this sharp movement, not an ABC here, but you have a WXY. So that's a wave 2. And then this is your wave 4, which is your flat, your sideways consolidation. And what does that mean? Well, that means if that's 1, 2, 3, and 4, well, then we're getting 5. But that would be 5 of, say, a 1, 2, 3. So again, if this is going to be your sharp wave 2, that wave 3 is going to build up here more sideways rather than a sharp drop. Now, again, none of this says this has to absolutely happen, but I'm saying if this ends up being the low and we're breaking out higher, that's what I'm thinking. This becomes a 3. We get the move up, or this becomes a 4 locally here inside of wave 3. Finish that up, and then we have that larger degree wave 4, which may be a triangle, maybe a flat correction on top of this. And again, you'll have everybody screaming that it has to go down because it's almost always gone straight down other than potentially this one here. Again, for those of you not paying attention, are going to say stupid things after this. You said blah, blah, blah. No. I'm saying if we get this movement, if this turns out to be the bottom here, then my understanding of structure says that that is what is most likely to happen. And once again, isn't guaranteed, but most likely to happen. And so that's where I would be starting what I'm thinking about. Now, I can adjust it as things come out and it shows maybe it's doing something different, but it gives me a place to start, right? See if we can get this back over here. So again, we're back here locally. And if that's going to be a 1 and a 2, then we should expect 5 waves up around 88.5. If we can get that, I'm going to look for 3 waves on the pullback, probably down here toward this 76.5, 70, 70,000, 77,000 area. That would be a 50% pullback. And then I'm going to watch and see, are we getting a reversal there? Heads up. In terms of this 21 EMA, that would push up. Here's how this would work. This is 1. This is 2. This would be 3. And 3 gets you right exactly into this pivot here. This is the monthly pivot here on the daily time frame. Get your rejection into 4. Get you a 5. So maybe a spike out here, something like that. And you kind of pull back. And then you do your wave 3, right? What I'm saying is interesting here is if we do that, this 21 EMA is likely to work as support on those pullbacks. So what you're looking for is, can we get a nice, strong, impulsive breakout and run up above this 21 EMA on the daily and then come back and retest it as support? So if it's doing this, even if it gets up here and you're still thinking it has to be a 4-year, it has to be a 4-year, and you're seeing something similar to what I'm showing here, you need to be real with yourself and go, okay, there's a lot of things happening here that's suggesting that that low may actually be in down here. Why do you want to do that? Because otherwise what you're going to do is you're going to fight this up. At this point, you've already missed out on 60,000 to almost 90,000. You've already missed out on a 50% run. What most traders will do if this happens is that they will continue, because once you're here, now they'll go, this will be going up here and they'll be like, oh man, I probably should get in, but no, it's just going to be a dead cat bounce. It's just going to be a dead cat bounce, blah, 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 right? And then by the time it breaks out higher here, they'll be like, oh man, but if I get in now, then most likely it's going to turn on me. And so I lost money on my short here, and then I'm going to lose money trying to short again or trying to long here, because it's going to reverse and head down and break down. So I'm not going to get in. And it's just, when you talk about the retail mindset and what is maximum pain, this kind of indecision, guys, is maximum pain. Maximum pain is not, I'm sure it's going to do this or that. It's indecision. It's when you're sitting there and you're trying to convince yourself to enter the trade, but your other thoughts about what you think is supposed to happen on, overall is in opposition to that. That is max pain. That is max pain. But here's the thing. Max pain for retail doesn't matter anymore. Because again, Bitcoin trades on that institutional volatility framework now. So mechanical degrossing, stuff like that, right? We talked about here about how there was likely going to get a snapback. Jeff had posted something about that. And I quoted him and I said, yeah, you know, we're going to get that. If this is mechanical degrossing as it appears to be, yes, we're likely going to get a snapback. And that's what we got here, almost a 20% rally right back up. But that's not, oh, I got the bottoms in. That is just mechanical. Again, that's institutions getting back in after getting out, reducing their risk. It's all mechanical. It takes time to get confidence back in. And so what I said was, when this happens, we're looking for 2 to 3 weeks where we continue to hold above that swing low. And if we can get that, the odds increase significantly that the low is probably in. Right? Because what happens is this goes down. Now, it could go down further, and it could go down further as like this just being the first phase of degrossing. We can have a second phase. If retail basically jumps in with too much leverage right off the bat here, there's a good chance we're going to see another flush lower. Yeah. Phase two of the degrossing. We could see that. But that's the big thing that happens. But the longer we're kind of holding support here and kind of drifting sideways, pushing up, the stronger the ideal becomes that this very likely may be the low here because of the events that caused it to get down here. As retail, you're not going to sell enough to just send it down. So what happens now? Well, now what markets are looking for, they used to when retail was in charge, right? When retail was driving price, they would look to flush retail's coins out of their hands into their hands. It was to flush spot price so that you as retail would sell your spot and they could pick it up. Nowadays, because of the way that things are now, it's all about flushing leverage. That's it. Okay? So, this is kind of where we're at the moment. All right? So none of this says that you have to give up your thought that the 4-year cycle is still in play. None of this says that you have to give up your thought that it has to go lower. What I'm trying to do here is give you an explanation for what's going on so you understand better. And then things to watch. If we get these things, that starts increasing quite significantly the odds that the low may actually be in. Now, I know you've got your guys out here telling me, oh, no, it's going to get way up here and it's going to, get above, it's going to get to 108,000, it's going to break down. Well, the odds are if we're breaking above 100,000 on a larger time frame, we're probably going to hold that. It's a very psychological level. Remember before we had trouble breaking above it? Yeah, so same idea here. If we're going to break above it, we're probably going to hold. So, again, just from a psychological sense, the idea that we'd hit 108,000 and then drop back down. Not that it can't happen, but that it's less likely to happen. Okay? So that's all this is, guys. I don't want any of y'all coming on my timeline later saying, oh, but you said this is going to happen. No, I'm telling you, I'm explaining the structure to you. I'm explaining the events. So you're not just blindly lollygagging around thinking something has to happen or something else doesn't have to happen. That's not how you trade. That's how you lose money. Okay? So that's what I'm kind of looking at here. Now, I'll be honest, I don't like that the daily stochastic RSI is breaching here into overbought already. I like that the RSI pulled back, found support at overbought or oversold again with the EMA here or with the SMA, and it's bouncing, but we're on the bearish side of neutral still. But stochastic RSI has continued to push higher even though we've dropped here. So I'm not a big fan of that. One way that can rectify, it can stay up there. It can stay up there for sure, right? We can look at these other times. Here's one right here. Look at this right here. When we had this pull back to the low. Now, obviously here we had bullish divergence off the RSI, but we were oversold on the stochastic RSI, and then we popped into overbought right here on the sideways, the initial move up and then the sideways. But we were also underneath the 21 EMA. Here we're not. But, you know, between the idea of where stochastic RSI is and where price action is on this sideways here, you know, maybe. But I would want to see something like this. Pretty, you know, sooner rather than later here. Yanking us up through this thing. And, you know, being a wave 3, that's what we would expect. So that's honestly, you know, when it comes to larger time frames, I'm looking for those strong movements up and through this, which right now is sitting right here at about 75,100 right now at EMA. By the way, also notice low volume node. So we should, like we had big candles kind of coming down here, we should have big candles pushing up through that to get us into this higher volume node. So, you know, that could definitely be something that happens, but that's, you know, that's what I'm looking at. And again, a little bit of concern with this, but we'll see how it plays out. All right. Zooming in closer here. Again, back up in here. We're coming up to the weekly pivot. We want to see a breakout above that, a 1 hour or 4 hour candle impulsive breakout and close above that. 4 hours, you know, topping out and overbought here almost on the stochastic RSI, but RSI still has a lot of room for it to possibly run there. Here, we're looking at 1, 2, 3 right here. So 1, 2, 3, 4, 5, 1, 2. Looks like we may have a 1, 2, 3, 4, 5 here. Gives us 3, maybe a 4 here. Get a 5. Generally speaking, we would look for a rejection around this pivot area. Maybe a little bit above it here. We have this overlapping price action, 70,000 or so. And if we can do that, you know, maybe around there, the idea would be we'd pull back through these bigger candles and get down here. As you can see, we're finding support on that 21 EMA here. So the idea is we would come up here and then pull back and probably find support right around the 21 EMA. You might get a little bit of a candle through it or a wick or something, but we would generally expect that to hold. So, you know, can we get kind of this move like this? Or it doesn't, it could get stopped right here at around 69.9. You know, it's just this area we're looking at. That's that low volume node right there. But if we can pop up through it into the higher volume node, that'd be great. We get the move down. And then we look for our move higher. So in my mind, this is the setup I'm watching to play out right now. Now, again, we overextended a bit here. We pulled back exactly where I was looking for it to pull back right here overnight. Like I said, got there within like $100 of it or whatever. And so now we were looking around this 68.5 area, 68.6, depending on what chart you're looking at. This is different than the one that we use at TWC. And so we went above that. We went to the 200%. Those of you that follow me enough, you know that if I'm talking about a wave 3, initial target is always the 1.618 extension. Secondary target is always 200%. So possibly, you know, we've got this 3 here and 4, and we could still see it even pull back, but looking for some consolidation here, which may have already happened. And then a follow through up here toward that weekly pivot. And then we're looking for 3 waves pulling back here to get us through some of these big candles. Now, the other thing is, instead of getting the sharp pullback here, we could just consolidate. We could get a flat correction. So get a 1 and then a flat correction as a wave 2 here. And we kind of pull back no further than basically 68.5 or so. But we'll see what happens. Obviously, if you're in TWC, if you're in the liquidity cartography group there, I'll be letting you guys know as it plays out what we're looking at. But generally speaking, this is what I'm thinking right now. Let me see here. That's exactly the scalp you entered today, Diego. Hoping to take profit below 70, close to the pivot. Yeah. I mean, it's easy targets. But again, remember, Notice Diego didn't say, listen, I'm looking to get every penny that pops out. He's like, listen, I'm hoping it gets up right around that pivot area. And that's where I want to take profit, regardless of if it pops out. And here's the thing. If you get a lot of participation and it's overextending this wave 3, for instance, right, and it just keeps subdividing, you'll be able to find another, entry in. But most traders are scared, right? They're scared. Oh my God, I'm in a good trade. I'm lucky, even though they might tell you I'm just that good. In their minds, they feel lucky, and they're scared that they can't figure out when to get back in next. So that keeps them from taking profit. Because what if it goes up without me? Instead, you should be thinking, what if I don't take profit and it comes back against me and I lose money? Because remember, to be successful as a trader, what do you have to do? Use proper risk management and lock in profits consistently. You don't have to keep riding it up if you don't want to. Now, we've got ways that I teach to ride it up and get, much, if not most, if not, to get some, if not most of the extra movement. So I teach those things as well. But just from a generic, just a trading standpoint, the goal is lock in money. If you were in this trade, if you got in somewhere down here and it hit this target and you took profit, that was a damn good trade. That's exactly what you should be doing. It doesn't matter if it keeps going. If it keeps doing that and subdivide, you got some time to look at it and figure out what's going on and maybe get into a new trade. But you locked in profit rather than letting it go up and then come back against you and then losing a lot of what you could have locked in, or even dropping below your entry and causing you to lose money overall. Okay? You have to be logical when you look at the chart. You cannot be emotional, folks. And most traders spend their entire time in the markets emotional. By the way, notice we also had bullish divergence here at those lows. Showing you there on the 1 hour. So that looks good. Coin, right now, I like the way coin is potentially looking. Just a little sweep of the low here on the weekly. Same basic structure as Bitcoin, except, I've looked at this. I've tried to figure out maybe, but this is clean, guys. This count is clean. It's hard to argue it's not. So you get one, and then you get A, B, and then 1, 2, 3, 4, 5. So expanded flat, or a flat here anyway. And you have a 1, 2, and then 1, 2, 3, 4, 1, 2, 3, 4, 5. So there's your 3 and 4. 1, 2, 1, 2, 3, 4, 5 gives you 3, 4, 5. 1, 2, 3. Here, that would be the top. Why? Because you drop down below the low here, right? Or most likely anyway. You go 1, 2, and then you go 1, 2, 3, 4, 5. So now you have 1, 2, 3, 4, 5. This isn't an ABC. This right now is an ABC. A, B, 1, 2, 3, 4, 5. This might be a bit of a triangle here, like A, B, C, D, E, down. So, for me, that's looking pretty good. Weekly, stopped just above oversold. So I could even see it maybe dropping down more. And if it does more than just kind of sweep this lower area here, we'd look for the 9760 area, which is the yearly S1 pivot. But I like the setup so far. And if this is a 1 and a 2, then that would give us 3 waves up at 800, 5 waves up, 956.5, almost $1,000. Psychological round tens number. Jumping into the daily, we got bullish divergence down here at the low. Boom. Right there. At support. Big rally back up. You can watch for a reclaim on the daily of this descending channel support. You can also watch for a daily candle impulsive breakout and close above the monthly pivot here at 216.26. If you're getting those things, odds increase significantly that you're going to head up here toward 3, whatever that is, around 330 or so. But if this is the count, we need to break out above 402 to add confidence to it, because that's our wave B. But the thing that got me with coin is how clean this count is. Now, remember, this is coin. They came in down here. And so this is cleaner than what we're seeing with Bitcoin. But if this is a legit count and we're going up, it's not going up like this without Bitcoin. Right? So we'll see. We'll see how that plays out. But nonetheless, and by the way, 5 waves up gets us, runs us all the way through the resistance pivots, the yearly resistance pivots. That's a clean move. We'll see if we can get that. But I do like this coin chart. I do like the bullish divergence on the daily. I like the weekly right there around oversold. And this is in spite of them having a double miss. They have to move down, boom, and then the move up. I can't move that that code there. Well, maybe I can. Give me a moment here. Let me see. I don't think I can move this code. No, I can't move it. I told you what it was. It was coin. Lay, pay attention. Let me see here. Let me go ahead and I'll take it off there. Yeah, there we go. If you guys want to grab the book, you can do so. Just go to members.texaswestcapital.com. By the way, I've got a new website design coming in at texaswestcapital.com. We're shaking things up. We're changing up the way everything looks in the platform and everything. The platform that we use did a whole bunch of updates now that we can really get in there and make it look much more like us. So that's exciting. The courses sections are going to get redone in a better way as well. So lots of great stuff coming there for there. So anyway, yeah. So now you can see it up there. You got it. Bum, bum, bum. Ethereum, you know, again, the movement down here is a lot like Bitcoin's movement. And again, we rallied up, got rejected, came back, found support around the descending channel support, popping back up. We're up so far today from the open here. We're currently up almost 6%. We've been up almost 6.5% so far today. But, you know, in terms of structure here, 2 big candles down, doji at the bottom, big candle back up. You love to see that. That's the kind of reversal you're looking for. And you find that support right around the monthly S1 pivot here at 1984.85. Dropped down through it, found it, dropped down, pulled right back through it. So we're just hovering around it, trying to break out higher. And so again, you know, before I talked about we were looking for the rally up into the monthly pivot at 26.93 3/4, and either we break out above that and the low is in, or we get rejected around there. We come back down. The 21 EMA is sitting right here. So again, if this is just like Bitcoin, if this is just going to be an ABC, we would generally expect it to find resistance around 23.15 to 24.14.5, which means basically at that EMA. But if we continuing up here to 25.74.5, it starts looking a heck of a lot more like this low is in, and you get 5 waves up toward this resistance, 3 waves back, and then you look for the breakout through it. Same thing we were seeing there on Bitcoin, if it's going to do it. Okay? Again, this is not me guaranteeing. This is me saying, listen, if it's going to do that, that's what we're looking at. Structurally here, though, look, your first resistance would generally be expected right here, where you have this overlapping, price went up the other way, then it came back down. That's all at that same 100%. That's all at the same right now, the 21 EMA. After that, what happens? Big candles up. Low volume node due to the big candles. So if we're not going to get rejected, then we should expect a strong move back up through those candles as we start getting into this higher volume node here. So these are, you know, these tools, these indicators are not like magical. They just align up with the same reasons in those same areas where you should be looking anyway. Even right here where you have the sideways, look at here. A higher volume node here versus the lower volume node and the low volume node here. Those nodes, these higher volume nodes, tell you where the market's more interested. So if you're coming up from it from below, it's going to work more as resistance. They're not inherently bearish or bullish. They just say, listen, the market's interested right here. So coming up from below, they're resistance. If you can pop out above them, they become support. Again, jumping out here to the weekly. Again, a really nice candle there. Didn't quite break it up in, had this huge volume. Let's see here. Where was volume larger? Last time volume was larger was here at the low on November 7th of 2022. That was the last time that volume was at least this high. What we got last week. Does that mean there has to be the low? No. But again, if you're looking at it, you're going, well, shoot. Maybe that's something we need to talk about there. So again, looking for a similar structural movement here, whether we get rejected or move on, that we're looking at with Bitcoin. They're tracking pretty well. Here's silver. Silver may potentially be a three-wave pullback here. Beautiful stop right at the S1 pivot. The volume on this, on TVC's thing here is really screwed up, so I can't really tell you anything with that. But it looks like 3. So if it's 3 and we break out above 92.1962, that increases the odds quite a bit that this is corrective and we're going to break out higher. And if we do, based on the height of that pullback, we've got about a 157 target. If we do. Again, breaking out above here does not guarantee that we're going to break out. This could be part of a larger double zigzag. So you get like an ABC as a W, ABC as an X, ABC as a Y. And now we have a W, then we'll have an X, and then we'll have a Y. Continue to do it, right? But generally speaking, that's 3 waves down. If we break out, it is corrective. So the odds increase that you're going to break out higher. Trade accordingly. If we don't, we should be looking to come on down here. Let's go on the weekly here. If we lose, if we get a weekly candle impulsive breakdown and close below 61,234, I would absolutely be looking at 38.71. That would hurt. That would hurt all the silver's going to 300, 400, 500 people out there, right? Not saying it's not, but I'm just saying this is a very large, very significant pullback already, which primes it for potentially coming down lower there. But we'll see. If we can get that breakout there, I'm looking for a likely breakout higher and looking up toward that 157 area. But if we start breaking down lower here, at that point, we could look at this as a 1, 2, 3, 4. We'll get a 5, so like a leading diagonal with a target of this 61 area, and then a 3-wave bounce, and then a move down below. Now, it may not get all the way to 38.71. It may only get right here where this large range resistance is around 47.89. But that's kind of where I'd be looking. High volume node right there on the weekly. Gold. You know, same kind of idea. We had another huge, 21.5% here versus silver's 50% drop. This right here is looking like 3 right now. So, I mean, if we're dropping back below this 46.70 low, my bias is to further breakdown. And in that case, initially we've got a monthly pivot here at $4,167.60, which would be initially where I'd look. But if we can manage to break out higher here, based on the height of this pullback, that would give us a pattern target of 63.64. So that's where I'd kind of be looking for it to go. Right now, this is just overlapping kind of price action, slightly higher highs here, a little bit better higher lows. We're finding support at the moment here on the monthly pivot at 48.9720. So that's good. But if we're losing that, I think we lose the low here. And if we lose that, I think we're going to lose this low here, and we should be looking down toward 41.67 area for gold. So that's, that's kind of what I'm thinking here, folks. So like I said, right here, it looks like we're consolidating before one more push up higher. So we'll see if we can get that. Then we'll look for that 3-wave pullback down here. And if we can get that and rally back up, it's 3 waves down, break up above that second wave. And then we should be looking, up higher there, depending on how high this goes right now, the 5th wave goes. If we can get up there, and then we get only that 50% pullback there, 5 waves up would get us around 78,000. And again, if we're looking at the daily here, three waves up gets us to 84, around 84,000, 84,100. So we could see some overextension on this 3rd wave here heading up. You see some overextension there, pull back, and then wave 5 getting up there and kind of get that more evened out. Again, if that happens, right? Right now, though, it's a good candle, nice bullish engulfing candle. And we'll see how we can follow out through the day, but we're going to have to break out above, above up like this 71,000 area to really kind of get us going. Then you're going to want to take out that 21 EMA at around 75,000. But then that opens up 84,000, which is, again, the monthly pivot there. So it's really, again, trading is not difficult, guys. Trading is simple, right? But it's not easy. And it's not easy because we make it difficult or we make it hard for ourselves with our emotional biases, with our psychological biases, with recency bias, with all these things, right? And it becomes even more difficult if you're hanging out and looking at a lot of analysts online because you get too much information. Everybody thought, they're like, oh, Bitcoin's online and cryptos are online. So now we got all these different indicators, these online on-chain metrics. Well, no, for most people, it's just noise. Stop making things more difficult. Bring them down. Make them more simple. That's what you should be doing. Also, guys, listen, I've got a few spaces open. I do something called a private system build where, basically if you've got a process and you've got things and you're doing it but you're not being consistent with it, if you're having issues understanding what's going on, where your issues are, you can join that. It's a 12-week program. It's a one-on-one thing, weekly calls. But I have very few openings for that. If you're interested in that, send me a DM. You can even do it there on, or just if you're on X, best thing to do is I put a post about it there. So you can go to my feed and you can find that post and just write structure, reply structure, and I'll send you a DM. And, we'll just do a real quick couple of questions just to make sure that you're even where you need to be for that. Before we even really go deep into it. But it is something else I'm offering right now. But of course, because it is one-on-one weekly calls for 12 weeks, is very, very limited spaces that I've got in that. So some people get in there like, listen, I don't need another indicator or I don't need learn a different way of doing it. I just got to figure out how to correct what I'm doing wrong with what I'm doing right now. And that's really what it's made for. Okay. Let me see here. Yeah, I can do Pepe real quick because you said please. Give me a minute here. Let me see if I can find it here real quick. Nope, that isn't what I want. What do I want here? That's what I want. Man, look at how good that's gone. I was talking about BCH here last night. So again, if you got into it, you're up about almost 8% this morning so far. Good job. Let me see here. Look at all the green, guys. Look at all that beautiful green. Is show party? Wouldn't you all agree? I need to put this order. There we go. Pepe. And let me see here. Looks like we've got some good resistance, right? Maybe around there. Kind of pulled back into it, dipped a little bit below, but came up there. Okay, so let me see here. It's possible we've got a 1 and then an A, B, ending diagonal is a C here. 1, 2, 3, 4, 5. Oops. Here we go. Nice throw under here. Rally back up, came back, found support on it, came up. Now through here. Where would I be looking? So let me see here. So I would be looking, if this is going to be a 1 with a flat as a 2 here, minimally I'd be looking at 419 to 435 here. Of course, you got all the zeros in front of it. Because, again, you get all this sideways, high volume node. That way, and you get a rejection and really kind of pull back. That suggests maybe an ABC and we'd head lower. But if we can break out through that and get up here around 459 or even 484, then it starts looking like 1, 2, 3 up here. Like that low is maybe in. Let me zoom in a little bit here. This is a 4-hour. Yeah. It's a lot of overlap, though. So you want to be careful with a lot of these when you got all this overlap because it opens up the possibilities of what could be happening. I like the breakout and the retest here of the weekly pivot. Broke out above the daily pivot, hit the R1, get a little pullback like we would expect. 15 minutes still resetting. Could look for that to head higher there, though. I just hate all the overlap. It doesn't make it conducive to what we're looking for. Let me see here. What do I need? This on the daily. So we had big volume here on this drop. On the pullback, we had a lot less volume. So I like to see that. So right here, we had 2.68 trillion, and over here, we had 1.32 trillion. So less than half the volume on this pullback here. Whoops. So that's a good sign because what it tells you is as the market had the opportunity to push it down lower, it didn't do it. So either the market doesn't have any supply left to push it down, and or two, it doesn't want to push it down. It saw all this absorption go on here and said, man, there ain't no way. I'm done trying to push it. So yeah, so right here, I like, I don't know, I like this breakout here if we can get this. This 385 area. So I would potentially, the trade setup for me here would look like a breakout above that, stop loss just below 346, put it at 345. Okay. Bernardo says the book is great info. I love it. That's that book I was talking about earlier, Before You Blow Up. But yeah, I would look for a breakout above that, and then the stop loss just below that. There's no reason to give you a big, long, stupid stop loss there, guys. Okay. Don't be scared of, if you're using proper risk management, you shouldn't be scared to take a loss anyway. The only people that are scared to lose are those who are taking big losses. Okay. Fibbo, what's up, man? Fibbo is sick today, guys. Wish him well. He's been having a tough time this week. Been really sick. The man who works all the time actually had to take PTO from work because he wasn't feeling so well. So that should tell y'all something. But yeah, I mean, I look at that. What else do we have here? We have this nice breakout through kind of this descending resistance here. So that's clean. I like that. But yeah, if breaking out above that, stop loss just below the swing low here. Let me see. Let me get a little bit lower here, because initially you're going to find, or you should probably expect to find some resistance right around here. These wicks, which is kind of this area here. So maybe around 404 to 420 or so. But if you can pop through that, that opens up the run up here to kind of like this 470 to 500 area. And if you can get a daily candle impulsive breakout and close above this 508, you should be looking for this to most likely, break out higher and kind of continue up. So yeah, it's kind of cruddy locally where it is because it's all that overlap. If you had to take an entry, that would be my preferred entry. But like I said, you want your stop loss to be just below that, if you're going to take that kind of entry, because the idea is that's the low. And if it breaks back down below it, then it could continue down below the swing low even, right? It could target the S1 pivot down here at 290. So you don't want to drop it any further than it has to before it gets you out of it. Because even if it does do that, it could just drop down here into the wick, catch some demand down here and turn around and give you an even better entry. So last thing you want to do is to have some big stupid stop loss way down here, which limits your upside potential. Because right now you're looking at, if you're doing this properly, look at something like this. And you get up here to this pivot. I mean, that's already almost a 2.8 hour trade right there. But if you pull your stop loss and you're scared to get hit, so you put it way down here, well, now it's only a 1.58. If you're so scared to get hit, you put it below here, it's only a 1.21. Why would you do that? Nah, that's silly. Don't do that. Okay? Remember, your stop loss, the main job of your stop loss, folks, is to tell you that what you thought was going to happen is not happening. It invalidates your thesis. That's what it's there. The secondary job it does is it saves you money. Okay? So you need to remember that when it comes to stop losses. Because most people, retail traders, right, they're scared to use stop losses because they're scared to lose money. And those that lose money, they take it from the idea, or those that actually do use it, they tend to think of it just as a loss mitigation tool, just as a, they can limit their losses monetarily, which is good. But you need to understand that a stop loss is there to invalidate your thesis. Because if you just do it as a stop loss is there to protect your money, then you're going to put your stop loss in silly places. Because you're going to convince yourself, you're going to go, well, if I put it here, I can have almost a 5R, even though it makes no sense to put it there. And so most likely it would get hit there and then continue up without you rather than down here, right? So when you think of a stop loss, think of it as what you're doing out there that's going to invalidate your thesis, your plan, what you think is supposed to happen. And that way it forces you to put it where it should go. And then you can look at the trade and go, does it make sense to take the trade? Is there enough risk return on that to take it? If your risk to return there is 0.93, stop taking trades like that. Why would you risk $1 just to make 93 cents? You're putting yourself in the hole because you're going to lose money from time to time, right? And every time you lose money, you're going to lose more than what you're making. You should always be looking at least a 1.5 R, but more, if you really want to be much more likely to have winning streak over time, to have your capital account growing over time, look for at least a 2R. So you're risking $1 to make $2 on those trades. That way, when you lose $1. When you win, you're making twice that. And that's how you stay in the game longer. That's how you build your account. Okay? So, all right, folks, listen, I'm going to get out of here. I hope you guys are having a great day. You're trading safe out there. I hope you're getting some money in. Be safe through the weekend. And man, oh man, be sure to sign up at themarketbreakdown.com. Again, Fibbo's next installment of his series is going to be in that this Friday, today. If you're looking for something where it can help you figure out what exactly you're doing wrong and why and how to make it work, DM me or like I said, reply with the word structure under the private system build post I put out there today or yesterday, whatever it was. Or DM me if you can DM me, that'd be fine too. Some people have issues with that. Also, we do have 50% off our annual Liquidity Cartography group coupon. So if you go to members.texaswestcapital.com and you click on the Liquidity group, Liquidity Cartography group, and you click on the annual and you use the code 50OFF, one word, 50OFF, you'll get 50 off going forward on the annual. And what else? Oh, get the book, guys. Go to members.texaswestcapital.com or go back to the beginning of this video and just click on the, take a picture of the, what you call it there, the QR code, and get that book. It's called Before You Blow Up. And that'll help you a lot as well. So it's all about helping you out. That's what we do. That's where we're at. We'd love to see you in TWC. Hopefully you'll be there. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. Have a great day and a great weekend. Trade safe. And I'll see y'all. If you're in TWC, I'll see you over there. Otherwise, if you join us on Beards and Bitcoin on Wednesday, 11 a.m. Central, 12 p.m. Eastern, I'll see you then. Or again, next Friday, and I'll see if I can get Fibbo to join me in next Friday if he's not called in to work for something. All right? Take care, y'all.
Trading tip: always manage risk before chasing gains.